Hey, Real Vision, Nick Halaris here. It's great to be back with you. I'm excited for today's conversation. I'm sitting down with Ryan Zega, a business development director for tZero. And the reason I'm excited about this conversation is because I think it's going to tie together some of the themes that we've been exploring on this show together around real estate tokenization and really the future of digital securities. Because Ryan's working on at a company that's at the forefront of really, in my view, what is the absolute key piece to this whole ecosystem, which is the trading. It's one thing to tokenize a bunch of things, but if you can't trade them, there's really no point to tokenization. So excited to have this conversation. Ryan, welcome to the show.
Yeah, Nick, thank you for having me. This is great and exactly right. Our focus at tZero is really the secondary trading piece and creating these dynamic markets that we'll certainly kind of dive into.
Well, thanks for being here. I figured a good place to start today is why don't you just articulate for us, like, what's the vision? What's tZero's vision? What are you all trying to accomplish?
Yeah, exactly. So you could really think of tZero as the New York Stock Exchange of private markets, where we have the ability to tokenize private equity and allow it to trade in a very public-like manner, similar to publicly traded stocks.
Okay, big vision. So just backing up a little bit before we get into this, the many specifics of that vision. No, my understanding is that private equity interests are already being traded in some capacity. Is that right?
Yeah, so there are kind of other, alternative trading systems and other venues where private equity is traded, albeit mostly in like a bulletin board type of setup where it's not really a live, continuous trading environment like what tZero has created, where we not only have the ability to facilitate whole trades, but a lot of these issuers that are coming on board and bringing on their LPs actually have the ability to fractionalize their ownership interests so that they receive tokens, which function much like shares in that respective investment, and then allow it to trade amongst a broader ecosystem of investors.
Yeah, like my understanding of the way these secondary market transactions work today is it's pretty informal. There's brokers in the middle often. So if you're an LP of a KKR fund or something and you want to get out of it before the time horizon of the fund, you can do it, but it's going to cost you some money and you're probably not going to get a true sense of sort of the mark to market like you would in a market that has full price discovery.
In our ecosystem, we do operate an order book system, which allows for buyers and sellers to essentially place their orders, and those orders can be fulfilled in portions of the total order size. So it could be individual, tokens and not the entirety. So it's a sort of a different type of approach where it is very public-like and then similar to, traditional public equity trading.
So walk me through where's tZero at today? Have you built the platform? What kind of securities you're trading? Just at a high level, walk us through that.
Yeah, definitely. So, tZero at a high level has been, it originally started in 2014. Over the past 7 or so years, Overstock.com was our initial kind of parent company that put together a really a broker-dealer ecosystem. So we essentially operate two SEC-registered broker-dealers. One's the trading venue itself, the tZero ATS, and then the second is our own retail broker-dealer, tZero Markets. So that's how we facilitate these trades in that ecosystem. Where we are today is that we're fully commercialized and we're working with a number of issuers that are seeking secondary liquidity in our ecosystem through tokenization. So last year we transacted about 70% or so of the overall secondary trading volume of digital securities through the tZero ATS. So we are the dominant player, and that leading position has been further solidified by Intercontinental Exchange, who's the parent company of the New York Stock Exchange, actually leading our latest strategic capital raise. So right now you have one of the largest players in traditional secondary markets actually planting their flag within the digital security ecosystem, and then specifically at tZero to address this private market illiquidity.
Interesting. What's the difference between the ATS model and Nasdaq, for example? What makes those different?
Yeah, definitely. So technically, an ATS is an alternative trading system, which actually functions much like an exchange, albeit it's sort of an exception to the exchange, right? So with an ATS environment, it actually is a bit more conducive to trading private equity, given that you could create really kind of customized trading environments and then also enforce certain rules and restrictions. A good example of that is with certain real estate issuers and even private company issuers. They're looking to limit the amount of equity that any beneficial owner can have, right? Let's say it was a 10% limitation on the max amount of equity. We could also enforce trading among certain domiciles, although tZero markets can accommodate investors from about 45 jurisdictions currently. Issuers actually have the ability to create these customized types of, bespoke trading environments, essentially, where you could limit traders to solely being in the US. Another exemption, another type of rule that can be enforced is the max beneficial ownership. And there's a really kind of a wide array of different options that an issuer has to create a more kind of catered type of trading environment, which typically doesn't exist with a full-blown exchange like the New York Stock Exchange or the Nasdaq. Another important distinction is the reporting requirements on the tZero ATS are actually much less onerous than a full-blown exchange. So at a minimum, we require semi-annual and annual disclosures. A lot of our issuers are actually going above and beyond that to provide monthly or quarterly disclosures to their prospective investors. Obviously, this isn't the same as a full-blown 10Q and 10K that would be required on a formal exchange.
So on tZero, I'm assuming that all of the digital securities that trade on there are in compliance with the SEC in some capacity or another.
Correct. Yeah. The securities that trade in our ecosystem are generally done in accordance to some sort of exemption. Typically, it's a Reg D, Reg A, Reg S, or Reg CF offering that had previously taken place or will be taking place. And then the trading that occurs in our ecosystem is done in accordance to a rule or an exemption. So a good example of that is with your traditional private placement that may have been a Reg D offering. Essentially, those Reg Ds can actually trade in that secondary trading ecosystem amongst both non-accredited and accredited investors 1 year post capital raise per Rule 144. There's actually another exemption that's a 4A7 exemption that allows for trading to occur as early as 90 days post capital raise solely amongst accredited investors. So essentially, that's how our SEC registered, broker dealer ecosystem works. Typically, these are exempt offerings, and then they're trading under some sort of rule or exemption.
And for the benefit of the audience, to all our friends at Real Vision, the various letters, the alphabet soup that Ryan mentioned, sort of the Reg D, Reg S, Reg CF, it's all basically the SEC framework around what you can sell, what kind of securities you can sell without registering, going through a formal registration process with the SEC, which is very costly and really doesn't make any financial sense under the current regulatory regime unless you're a very large company. These and the main issue is sort of whether or not the investors are accredited or not. And so the whole regulatory framework is based on this, and accreditation is the sort of proxy that the SEC is using for whether someone's financially sophisticated enough to make an investment in these securities.
Yep. No, Nick, that was a very strong, kind of way to, paraphrase it exactly.
Yeah, thanks. So taking it to the sort of front end, like let's say that I wanted to open an account and start trading on tZero. How does that look? Are you doing know your customer stuff on me? Do I have to be accredited? Walk me through that.
Yeah, definitely. So the account creation process on tZero Markets is very similar to opening a retail broker dealer account at a Charles Schwab or a Robinhood. So you'll go through the account creation process, and that'll include a KYC, so know your customer, an AML, anti-money laundering. And essentially, you'll input your information, address, name, provide a form of government ID. And as I noted, we can accommodate investors on an unsolicited basis from about 45 or so jurisdictions. So we truly are a global platform in that sense. And then you'll essentially kind of run through the account creation process, which is a very quick process. and then, presumably be able to open an account at tZero Markets. And then at that point, you have the ability to fund that account through a number of different ways, whether it's a wire transfer, actually a bank account integration through Plaid. Then we actually allow for customers to fund their account with crypto. So it could be a Bitcoin, Ethereum, or USDC coin. Obviously, we're using a paywall given that US broker dealers can't hold cryptocurrency, but that's basically the process, right? And then investors have the ability to go through an accreditation process when they're opening their account. With the accreditation process, that will actually potentially expose those investors to securities which may only be trading amongst accredited investors. Currently, all the securities that trade in our ecosystem are trading amongst both non-accredited and accredited investors, but there are certain rules and exemptions or product types that may only be exposed to an accredited investor base.
Okay. So right now, basically all of the tokens that are trading have sort of had their time horizon where now they're allowed to trade to accredited investors freely or non-accredited investors freely.
Exactly, yeah. So if it's a Reg D, for instance, that's trading amongst both non-accredited and accredited investors. And then we have a Regulation A, prior Regulation A offering that's trading on our platform, Exodus as well, that is exposed to both non-accredited and accredited investors.
Okay, so let's talk for a second about the crypto side of this because I think that is an important topic and one that'll be interesting for our audience. So let's assume that I have Bitcoin at Coinbase just to keep it plain vanilla, and I want to transfer. I open my account, I'm accredited, and I transfer over my Bitcoin. What happens next? And I want let's say I want to start buying some of these digital securities. What happens next?
Yeah, as I noted, yeah, you have the ability to fund with Bitcoin as well. Essentially, that'll hit the paywall so that Bitcoin is transacted into USD when it hits our ecosystem. We actually own a cryptocurrency wallet and exchange service called tZero Crypto as well. And then we are in the process of merging the user interfaces of tZero Markets and tZero Crypto so that users can actually seamlessly trade in between cryptocurrencies and these digital securities. For those transactions, again, given that this is an SEC registered broker dealer, there is that paywall element, right, where any crypto is transacted into USD prior to kind of entering into that broker dealer ecosystem. Albeit for a user, it's going to be a pretty seamless process.
All right, and then inside, like let's say you get through all that, you've got your money, you're ready to trade. Are the digital securities all on the same blockchain or are you blockchain agnostic? How is that put together?
Yeah, that's an excellent question. So we are a blockchain agnostic company, and we have tokenized utilizing Ethereum, Algorand, and Tezos. So the securities that trade, have the option to choose a layer one solution. Those are the three that are integrated thus far. And then any new issuance that comes on board with a new layer one solution would just have to kind of go through that same process of integrating a new layer one solution. So kind of speed to execution, it would be utilizing one of those three that we already have integrated, albeit we are technically a blockchain agnostic tokenization provider.
Okay. And for the user, there's no difference between whether the issuer issued on Algorand or Tezos or Ethereum.
Exactly, yeah. So if you're a buyer or seller of that particular security, that's really kind of at the background. And then the beauty of tZero Markets is that at the foreground, it's a very similar type of experience to other retail broker dealers where you don't actually need to have any intimate blockchain knowledge. Really, for you, it's transacting these private market securities, right, in a very public-like manner. So you'll find that very akin to, trading public equity.
And when let's say I bought a basket of these tokens, I bought one of each. What does my account statement look like? Am I holding crypto these crypto tokens in an account that you are custodying? Like, how does that work?
Yeah, so there are various custody providers that are integrated within our ecosystem. It really depends on the security. And then from a reporting standpoint, tZero Markets can facilitate 1099s. And then with mostly, I would say, our real estate clients and some other tangible asset clients that are facilitating K1s on an annual basis. That's something else that we can facilitate alongside the transfer agent that is integrated within our ecosystem. So it's a very seamless experience from a user standpoint, where the different reports are available to them either via their tZero Markets account or via an interface with the transfer agent.
And when one of your issuers makes one of these disclosures, you mentioned earlier that they're required to make some kind of disclosures, and many are making more than they're required to do. What happens? Is there like a portal that you can access or something?
Yeah, that's a good question. So every asset has an individual landing page. So within that landing page, you have a stock price chart, essentially the ability to trade that asset. You could actually see the order book. There's some pricing history. And then towards the bottom of that page, you'll actually have the disclosures that have been previously provided. So that'll include all the prior disclosures. So if you're a purchaser of that security, you could actually click in and see that initial disclosure document that was provided when that asset began trading, as well as any of the updated disclosures. So you could actually see a bit of the history of the asset. And then in addition to that, we do have issuers that are looking to get somewhat creative. So the St. Regis Aspen Resort is an asset that trades on our platform. They actually have a ownership benefit program, so that if you're a token holder of X amount of equity, you'll actually get a discount on your stay at the St. Regis Aspen Resort, as well as other benefits. So that's a very creative approach to ownership, right? Where that particular program is administered outside of our ecosystem, but there is that benefit for equity holders in the St. Regis Aspen Resort.
Yeah, that's really smart. Do you know what that's like? How many people have taken advantage of that benefit? Because that's a really cool idea.
Yeah, but personally, I'm not sure, since it's administered outside of our ecosystem, but it is a very kind of creative approach to giving that benefit. Not only can you, wave around presumably your ownership interest in the St. Regis Aspen Resort, but, have that added benefit of, getting a discount at a, hotel that you presumably like to stay at.
Yeah, yeah. This real estate stuff. If you all can figure it out where there's volume and an actual deep liquid market, it really opens up the world. And it may help alleviate some big issues in our society. That's why I'm excited about this space. I've been thinking a lot about, we have this like ownership crisis in America where it's difficult to become a homeowner and becoming increasingly difficult. But maybe there's a way that you could still own pieces of real estate. Maybe you could own a piece of your apartment building, for example. Let's say you're a long-term tenant in a building in New York, and the owners of that building wanted to incentivize you to be a good tenant and feel like an owner. Like, you could really change some of the dynamics in America culturally if this works.
Exactly, right. Ultimately, that's what we're looking to do, is democratize access to investments that were formerly elusive, and also provide this added benefit to existing limited partners within deals where, in your traditional private placement, you're investing in that private placement, and then you're really having limited or no liquidity through the hold period, which may be 5, 7, or 10 years, depending on the particular, investment fund, whatever it may be. So that's kind of that is a goal, right? To democratize access. And then specific to real estate and other tangible assets represent roughly half of our pipeline at this point. So we see a wide variety of use cases within the real estate industry, whether it's individual assets, funds, portfolios, non-traded REITs, seeking this tokenization in order to allow for secondary liquidity. And I think another dynamic that will, come to play is investors participating in some sort of fund vehicle, which may have a wider horizon, right? Maybe it's seeking value add multifamily in the Southeast. You're seeing that a particular geography or sponsor within that fund is outperforming. Maybe you'll take a bit of your equity interest in that fund, sell it, and then purchase a more kind of honed investment, right, in that specific geography or particular sponsor. So that flexibility just wouldn't have existed in that very traditional sense where, you're liquid, you're in a fund, you're not moving. Here, it actually allows for investors to have a bit more flexibility. And I know that's a vision that's still, maybe months or years down the line, but it's a dynamic that, is plausible in the future.
It's exciting stuff. So let's talk about that. Like what you mentioned that tZero had a pretty big market share last year, but let's talk about volume for a second. How much volume is there and how far away are we from this dream moment that you and I have been talking about, which we both would love to see happen?
Yeah.
But where are we today and how are we going to get there?
Exactly. So on a nominal basis, that 70% represented plus or minus $60 million of nominal volume, right? So it's a drop in the bucket compared to the public markets, albeit the investment by Intercontinental Exchange has really put us in a very solid spot to scale the platform, right? With high quality types of sponsors who are seeking the secondary liquidity or are actually doing capital raises and, identifying tZero as a potential secondary trading venue, obviously subject to final due diligence. So I'd say the stadium is essentially built, right? We have the fans coming in, which, could be the equivalent to investors through kind of tZero markets or a third-party broker-dealer subscriber. And then we're just, in the process now of onboarding high quality sponsors.
And have you seen any like dramatic changes in the volume in response to this sort of crypto winter or whatever's been going on this year?
So not necessarily in the respect to volumes, but definitely it has brought issuers to us that are thinking more creatively about liquidity for their existing LPs, right? When times are a bit tough, individual LPs may be seeking sort of liquidity on their investments. And as I noted, traditional private placements really have limited kind of liquidity options. Some of the non-traded REIT vehicles that we're working with may have quarterly redemptions. Obviously, this quarterly redemption function is a bit difficult to administer when you have a tremendous amount of outflows and don't necessarily have the inflow. So it's almost like an imperfect tool for liquidity and a really, a good option maybe just tokenizing the equity and allowing it to trade in this public like market and allowing those LPs to really become the, you know, holders of their own, hold period, right? To determine when's the right time to enter and when's the right time to leave, and pricing. So you have that dynamic market there.
What does tZero think about the ramp up to a full stadium? Like what is a full stadium? How many billions or have you all had internal conversations about what the volume needs to be for this to be a healthy ecosystem?
We don't necessarily have like a specific number in mind, but it is, continuing to add additional users, right, through tZero markets and third-party broker-dealer subscribers, and then also additional issuances, right? Our goal is to have a very diverse type of marketplace with a number of, offerings that, aren't solely real estate related, but private companies, esoteric assets, revenue streams, intellectual property, oil and gas exploration. I mean, we have a very diversified pipeline of issuers that are looking to come on board, and creating that dynamic type of marketplace is something that is, key to us. And then the other thing to note is that although we are a US based broker dealer, we do allow for international investors, and then we have a pretty robust international pipeline as well.
Okay, interesting. Let's talk about the pipeline for a bit. You mentioned earlier that a big chunk of it is this real estate tokenization plays. What else is in there?
Yeah, other than that, ton of private companies, some of which are already trading on our platform. So we have Curzio Research, that's a research company that did a prior Reg D 506C offering. They were actually trading on an international venue, delisted, and then came to us for secondary trading. We have Exodus, which was a prior Regulation A capital raise that took place. They raised the full $75 million via Reg A offering amongst 6,800 investors and have that, trading within our ecosystem. And then the next asset that we're onboarding is XY Labs. So that's another private company that did a Regulation A offering. They raised about $22 million from 24,000 individual investors, and are coming to us for the secondary trading. So real estate, we have a ton of private companies. And then beyond that, a lot of other typical private placement types of investments that had very little liquidity. So royalty streams, intellectual property. We're actually seeing artwork, and then we're actually seeing very interesting use cases, right? It could be shipping oriented, types of investments, horse racing. I mean, there are like horses for horse racing. So, a ton of very, cool, innovative type of ideas that will, provide accessibility to really elusive asset classes to a much larger democratized audience.
Interesting. And like XY Labs, like remind me, what kind of business are they in?
Yeah, so they provide geolocation kind of services, and then different types of services associated with kind of geolocation, sort of spatial understanding. So it's yeah, kind of a cool, innovative platform that wanted to raise capital amongst the broader ecosystem of non-accredited and accredited investors through a Regulation A offering, which is a route that we're seeing a lot of issuers take now, that may have a very robust type of fan base, or user base. So, really good kind of case study for us on a private company, in the process of seeking secondary liquidity on the tZero ETS.
Okay, and their disclosure essentially would amount to just typical financial stuff, like here's our here's our financial statements and for the quarter or the year.
So yeah, with the initial disclosure, there are I believe it's a per 15(2)(c)(11) is the sort of rule that kind of dictates the requirements there. But yeah, it's a fairly kind of like benign semi-annual and annual disclosure statement plus that initial disclosure statement, which provides investors some unaudited financials and then information on the performance of that particular security through that period. And then on the initial disclosure, there is it's almost like a regurgitation of the original private placement memorandum, where they include some risks, information on the asset, information on the management team, et cetera.
And on the tokens that are currently trading on tZero, have you all seen any pricing anomalies? So, deviation significantly from their sort of IPO price or for the price that was in their private placement memorandum? Or has the trading been flat?
So yeah, on each individual asset, there are kind of unique trading dynamics, right? Given that it's a marketplace is up to bidders and sellers to determine pricing, and then we really recommend issuers to provide potentially above and beyond just the minimum level of disclosures, right? To give some indication of the performance of the asset. And then with some of our tangible assets, they are providing disclosures related to appraisals or some other sort of third party, type of valuation, so that potential buyers and sellers of that asset will have a better understanding of where a third party valuation may be. But ultimately, there are those market dynamics similar to public equity, where it is ultimately up to bidders and sellers to determine the pricing of a particular security.
It presents an interesting sort of question because unlike stocks where you can kind of like aggregate all kinds of information and say, oh, this has a PE of this or a price to sales ratio of that, you're talking about like a lot of different types of assets, right? So it's one thing to value a company that has ongoing operations, and another thing to value a royalty stream or a piece of real estate or cash flow producing piece of real estate. So in my mind, it actually will make the investing process more interesting, but also more challenging because to really transact with any intelligence in those asset classes, you got to learn how those things trade and how they're valued by experts essentially. So it's not going to be easy, but it'll be more interesting.
Yeah, exactly. There'll be an interesting kind of dynamic with pretty much it boils down to disclosures, right? And what's contained in there, any third party valuations, and that'll be a helpful kind of guide on where evaluation may be, and then ultimately it is up to a bidder and a seller to determine that final pricing.
One of the tokens trading already on yours that you just mentioned, that Curzio research, I think that one's really fascinating because it shows like how cool this could be when it works. I'll say when, because Curzio, if I understand right, is essentially like a big time financial newsletter company that has really got a huge audience and has built this like great boutique business. And sort of rather than selling out to some big company like Motley Fool or something, or MarketWise, they have this new option, which is to maybe not sell the whole thing or sell a piece of it. And I think that's really cool. So how they've been doing?
So Frank Herzio, really kind of close to tZero and a big believer in what we're doing. It's a fantastic use case, right, of a private company wanting to stay private but provide public-like liquidity. And this is an option that we're seeing with a lot of other private companies, is that they don't necessarily want to go down the route of working with a private equity firm or a larger LP that will have a tremendous amount of rights, and instead they're looking to raise syndicated passive capital, right? And then with Frank and some of these other companies, they are looking to raise capital amongst their user base, which could be a very robust user base. Great example of that is Exodus, when they did their $75 million Regulation A plus raise back in May of 2021. They actually raised a lot of that capital from users. They have about 1.25 million wallet holders in that platform that, through a Regulation A raise, could presumably be potential investors in that company. So we're seeing that dynamic with a lot of other private companies with very large user bases or fan bases, where they want to raise capital from that group of investors that is passive in nature, and then allow that to trade in our platform. In addition, we actually are seeing different funds and other traditional private placements that may have a couple of LPs that account for a large bulk of the capital, and they want to have a smaller portion of the equity raised in a syndicated manner with passive capital, and then have that trading in our platform. So that's really another beauty of tZero and our environment, is that not necessarily 100% of the equity has to trade. We have assets that are only trading a portion of their equity. And actually, with the St. Regis Aspen Resort, they are trading roughly 19% of the equity on our platform. So that kind of shows the flexibility and level of creativity that we're seeing from traditional types of players in this ecosystem, as well as other groups that are out raising capital.
Yeah, you mentioned something that reminds me of some of the early conversations I had in the real estate world about tokenization. Many of the bigger players who are used to dealing with like super savvy institutional capital are and demanding capital. They're super excited about the potential for this ecosystem to deliver them like an easier experience with less onerous terms and whatnot. And so I think there's a bunch of believers from that world, just in the stance of like, hey, I'm sick of negotiating against pension funds with $1 trillion to allocate, and might be better for me if I can negotiate against some smaller individuals or smaller companies or smaller funds.
Exactly, Nick. And my prior history, so I joined tZero about 2 years ago to spearhead our real estate and fund initiative. Prior to that, I worked for a publicly traded REIT called Paramount Group, and then before that at a private equity real estate firm called Normandy Real Estate Partners, and then prior to that, a large institutional investment manager, Prudential Real Estate Investors. So I get some of those dynamics with a large, demanding type of limited partner, and then also the benefits of this syndicated, passive equity. And then we actually have a number of larger types of institutional firms in the real estate space, private equity, and global financial services in general, that are looking to raise this syndicated capital that is passive in nature, and then allow it to trade on our platform, because they see the obvious benefits of providing this secondary liquidity for formerly illiquid product.
Have you all been approached by any celebrities to do anything interesting with their intellectual property?
That is a good question. We have spoken with issuers that are looking to take royalty streams with, music, film, and then other groups that are looking to be creative with portfolio companies that a particular, celebrity or VC firm owns, right? Where you could actually hone down into the individual kind of brand, right? Whatever that brand may be, to raise additional capital around it, or just allow your existing owners to be tokenized and trade within our ecosystem. So yeah, there is a high level of interest, and that'll be a very, cool dynamic, right? Where your particular celebrity that you like, believe in their brand, have seen success with, their, music, film, or, associated, portfolio companies to allow you to potentially be an investor is a very interesting dynamic that, hopefully will exist sometime soon.
Yeah, I hope so too. I think that would be really interesting and potentially lucrative. You could buy into all the companies that Jay-Z is backing, or LeBron James, or whatever. These
Yep,
companies tend to do well. If they have that kind of star power behind them, they've got this sort of built-in marketing. They got financial resources. So I don't know if it has any
exactly.
alpha, but it probably does.
Yep. Yeah, it is something that a lot of people are kind of thinking about in discussion. So it makes a tremendous amount of sense for different groups with really rabid fan bases to engage with them and allow them to participate in their success.
All right, just a few more questions, Ryan. Thanks for all your time. This has been a super fascinating discussion. Fast forward a year from now, how many digital securities are trading on tZero?
Yeah, we haven't provided any sort of guidance on the number of securities, but as I stated before, the goal is to have a very dynamic marketplace with a number of high quality issuances that are trading in this broader ecosystem.
How many are trading on there today?
So currently we have five digital securities that are trading. So we have our own preferred equity, tZROP, that's trading on our platform. We have the St. Regis Aspen Resort. We have Curzio Research. We have another real estate asset called the Spot at Myra Park. And then we have Exodus Trading. And then the next asset that we're onboarding is XY Labs. And then, as I noted, we have a robust pipeline beyond that, some of which have been announced, and then others that were, have signed or in the process of kind of working through our pipeline.
And what's your biggest hurdle in your mind? What's the biggest hurdle to tZero to achieve this?
And that's a great question, right? As we work with different issuers, there is a very, high education sort of. A lot of what we do is an educational effort, right? To tell them that, look, your traditional private placement actually has the ability to trade in this like robust kind of, ecosystem. Because no matter if we're speaking with a smaller private owner operator, private company, or a large institutional kind of investment manager, law firm, investment bank, etc., these groups understand the benefit of having this secondary trading. The thing is, this is nascent, right? It's an early ecosystem. When I talk about the nominal volumes, it's still a drop in the bucket compared to public markets. So right now we're dealing with groups that want to be innovative, they see the future and they're executing it. And there's a lot of these groups, right? So, hopefully kind of fast forward a year from now, that educational element becomes less of a thing, sort of the innovation becomes less of a thing. And then really we're just, onboarding these high quality issuances, onto our platform.
And what are you most excited about?
Yeah, I'm most excited about is having a really kind of dynamic type of pipeline, right? With a lot of different, cool types of issuances and individual securities that are trading that were pretty elusive previously. So, real estate is something that, is close to my heart, my whole career in institutional real estate. So there's a lot of, great use cases there. And then with the private company side, royalty streams, et cetera, there is a huge untapped market, right, of private assets that want to provide some level of liquidity to their investor base, and then also kind of expand the amount of users and investors in that particular asset. So that's really what I'm most excited about, right? Is onboarding these great high quality assets and then providing that accessibility to a much broader democratized audience.
I'm with you. I'm excited. I feel like real estate's a no brainer. The more I dig into this, I feel like it's actually kind of the key to the survival of a lot of the crypto stuff, in my opinion, because it's one thing to build these rails that allow for the speculation aspect of crypto, but you actually need to have some use cases that justify these protocols and these technologies, and sort of opening up real estate to a global audience that never had access to it is huge. That's like a massive benefit to society. So I'm pulling for this whole ecosystem to come together as fast as possible. And then I think the other thing for me, like listening to you talk about the celebrities and stuff, like that's another area, not just celebrities, but just take, for example, the individuals who are doing really, really well in this new creator economy, whether they're newsletter writers or podcasters that are really adding like tremendous value to society by opening people's minds and stuff. And many of them are monetizing their their influence and doing just fine. But this is going to give them a tool to maintain their independence and continue, instead of be bought out. Hey, let me sell off to XYZ media company. You can still have your podcast or your newsletter and be independent. And to me, that's really exciting.
Exactly, right. The whole kind of notion of stay private but trade public like, and then also that ability where we are working very closely with some of our sister companies, for lack of a better term, with Intercontinental Exchange, and for fast growing companies to potentially have that secondary trading on an ATS environment with the potential of uplisting, for lack of a better term, via a formal exchange like the New York Stock Exchange. So we'll see a lot of these dynamics at play in the future.
Great. Well, Ryan, thank you very much. Where can people find you on social media?
Yeah, so probably LinkedIn is great, or you could shoot us an email at sales@tZero.com if you have any sort of issuances that may be of interest. I'd love to kind of touch base via either form, LinkedIn, or that sales@tZero.com.
Great. Well, thank you. I look forward to following up and seeing how tZero is doing in the near future. Thank you very much.
Awesome. Thank you, Nick. Bye bye.